Good morning, everybody, and this is your S&P 500 setups for today. So CPI data yesterday, as well as the Fed's minutes. CPI data got us moving to the downside, and then we basically stalled. So tough one to call here whether we have broken through this zone of support. And you can see there was resistance, support this week, and then we've broken through it. So I'd be a little bit cautious, just trying to read something into this at the moment. Oscillators are pointing to the downside. There was diversion setting up, but that's gone. So at the moment, I think this is still very much sideways, and we do have another level of support that we bounced off, which is at 51.42. So a fairly strong zone of support to the left. I don't think, if you come down to the weekly, you're going to see nothing until here, and that was 48.22. So we are overextended or overbought on the weekly as well, but this trend is really strong to the upside, and V reversals are extremely rare. So if you look at this strong move up, the probability of this dropping is not very high. So take everything that you see with a pinch of salt. Could be setting up for a move down, or this could just be some volatility that we need to just be cautious of. So drilling down through the time frames, and you can see the last week and most of this week, it's just been these massive moves to the downside, a claw back, and then a massive move down, claw back, massive move. No real structure above and below the moving averages, which always indicates volatility and confusion. And you can see how we drop below the moving averages, above them, below, above, below, and nothing really to read into it. If you look at the price action here after the data came out, you can see lots of tails here. So oscillators are grouped to the downside. Nevertheless, there's nothing really there that indicates where you should be getting in or if you should be getting in. So a data bar like this is not something that I like trading. I'd prefer to see a retest of structure, and if then you get a continuation, then you know that it's something that people are concerned about. But this to me at the moment is just an algorithm that is traded to the downside. Well, not one, probably multiple of them, just based on when the data came out, and then you have the consolidation here, so where the profit taking happened, and then nobody bothered to continue selling, and nobody bothered to buy either. So we were looking at structure early in the week of a break of that range to the downside or to the upside, so it has broken to the downside, so we should be looking for some sort of a retest. I'm just not so sure that that is the case. To me, this is starting to look more like a bigger range that is brewing, and if you look at it on the 15-minute data and then look at the sideways price action here, big up, big down, big up, big down, no real direction. So I think the wise thing to do here, I'm just going to move these levels around. So the trend is down, granted, we know that. We have broken what was a triangle, and often these things break one way and then sort of come back to break the downside. So what typically would happen with a triangle break, I just want to find where the level is, it looks like it's here. So what typically happens is it breaks, comes back to test the apex of the triangle. So in other words, where these diagonal trend lines cross, which is around here. That is 51.54. 51.50 seems to be the level. So logic goes like this. We move up, we find resistance somewhere, and the somewhere would be 51.66. If that fails, then higher up at 51.81. We then pull back and we find support normally at 51.54, and that validates the triangle for a break to the upside. But the logic of the setup is big move down, consolidation triangle, big continuation to the downside. So whatever move happens here typically comes back to test this 51.54. This is going to be your line in the sand. So if that can't hold, you're going to see us start rolling to the downside. Now, if we come back to the 8 hour and we just look what is next, if this level can't hold at 51.42, which is the bottom end of the triangle here, then where is the next logical level to the downside? And that would be around there. And you can see how strong this is. Look at the buyers coming in, sellers were here. So this level is 51.12. So 5100 would be the next logical level. So with all that noise in your head, it's actually quite simple. You're not really looking for a long at the moment, not unless this zone that I've put in for you here at 51.50 holds. So if this area, we find support here and we start moving back to the upside, you'll see a cross over the moving averages, and you do have a long brewing. But it's going to be a tough one because you're going to get resistance at 51.81, 5100. There's 51.95, so 5100 would be the next area of resistance. And then you would see another move down to come and bring these tails of the triangle into place. In other words, price will come down and try find buyers somewhere along here. So my gut at the moment, and this is really a gut, almost a coin toss, is this big move down. There's consolidation. There's going to be people crunching numbers. They're going to wake up this morning and this afternoon when the US comes online and decide whether their number crunching is going to give them the edge or not. So that's going to dictate whether we move. So treat it as range more than anything else. So you're looking for this apex at the moment. That is the key area that you need to pay attention to, which is 51.54 or 51.50. If we hold it, if we maintain support here, and we start getting moving averages, crossovers, and your oscillators group to the downside, that's going to indicate that we're going to probably move back to the upside. But my gut is that we are probably going to come back, break this, move to the downside here, which will form a bigger range, and the range will be between the tops of the triangle and the bottoms here, and then reject this 51.50 for a move down to break 51.42, heading for 51.12, ultimately 5100. That's kind of my view at the moment. It can go the other way, obviously. Probably a 50-50 call, to be honest, but yeah, that's kind of the setup that I'm going to be looking at. Not going to force it. If it's not there, it's not there. We'll just wait for better days. Bear in mind that you've got earnings starting. They have already started, but there's nothing really meaningful yet. I think Friday is when the banks start. So it could just go sideways until tomorrow, then spike a bit, and then wait for Monday when the earnings season really kicks off. Anyway, that's kind of my view for today. I hope it helps, and we'll catch up with you tomorrow. Cheers for now.